Last week during a client consultation with a newly onboarded client, something interesting happened. As I was discussing retirement planning with a software engineer, it hit me that we need to put more content specifically to US based NRIs. So today I am starting something new. This is our first US focused video, and I promise you will be seeing one every month from now onwards. We are going to tackle the unique challenges and opportunities that you face in the United States. So let me tell you about Rajesh. He's been in the US for about 3 years now, and he came to me with a question that I hear almost from anybody who has moved to US recently. The question is, should I go for pre-tax or Roth 401k contributions? The confusion on his face reminded me of how complex this decision can be, especially for NRIs who have unique consideration that our American colleagues might not have to think about at all. Now, before we deep dive into this topic, I want you to know that this decision might be different for you than your American colleagues, and I'll explain you exactly why just in a moment. But first, let's understand what these terms actually mean in simple language. A pre-tax 401k is exactly what it sounds like. You're contributing money before paying taxes. Think of it as getting a discount on your taxes right now. When you put your money into a pre-tax 401k, that amount reduces from your taxable income of the year. On the other hand, with a Roth 401k, you are paying taxes first, then contributing the money. The benefit here comes later when you withdraw the money in retirement. You won't have to pay any tax on the money or its earning. Let me break this down with a simple example. Now imagine your annual income is 150k USD and you want to contribute 10% to your 401k. So let's assume you are in a 24% tax bracket. Now with a pre-tax 401k, you would contribute 15,000 before any taxes are taken out. This means your taxable income drops to 135k USD and you pay taxes on a lower amount. This gives you immediate tax savings of $3,600 for the year. Now with a Roth 401k, you would pay taxes on the full 150k USD first, then contribute $15,000 from what's left. While this means paying more in taxes now, remember when you withdraw this money in retirement, including all the investment gains, you won't have to pay a single penny as taxes on this money. Now here's where it gets really interesting for NRIs. The decision between pre-tax and Roth isn't just about tax brackets. It's about your long-term plans in the US. This is something Rajesh and I discussed at length during our consultation. Now, if you're planning to return to India eventually, pre-tax contributions might make more sense. When you're making pre-tax contributions, you're taking advantage of lower tax rates now in the US. Later, when you return to India, you can potentially structure your withdrawals to minimize the tax impact. Plus, you can use the tax treaties between India and US to your advantage. Many of my clients who plan to return to India prefer this option because it gives us more flexibility with our tax planning. However, if you're planning to settle in US long term, like many of the other clients, Roth contributions would be more beneficial. Why? Because your tax-free withdrawals in the retirement won't be affected by the future tax rate changes in the US. You won't have to worry about the required minimum distributions, RMDs, with your Roth accounts. And if you plan to leave money for your children, they won't have to pay taxes on the inherited Roth funds. Now here's something crucial to remember for 2025. You can contribute up to $23,500 to your 401k, whether be it pre-tax or Roth or a combination of both. And if you are 50 or older, you get additional $7,500 as catch-up contributions. That's right, you can actually mix and match these contributions based on your specific needs. Now, from my experience of working with hundreds of NRI clients over the past decade, I have noticed that many prefer what is called as a hybrid approach. That means putting some money into pre-tax and some money into Roth accounts. This strategy gives you flexibility and helps you manage your tax liability both now and also in the future. It's like not putting all your eggs in one basket, but from a tax perspective. Now, when making decisions, think about your timeline. Are you planning to stay in the US for long term or you want to return to India? Consider your tax brackets now. Do you expect to be in a higher or a lower tax bracket during your retirement? And finally, think about flexibility. How much do you value having tax-free retirement withdrawals. Now remember, this isn't just about the math. It's about your life plan and what makes you feel more secure about your future. Just like Rajesh, you might have some unique circumstances that affect your decision. So if you're not sure which option is best for you, I am here to help you. Now before we wrap up, I want to remind you that this is just the first of the many US specific videos coming your way. If you found this helpful, don't forget to subscribe and join our exclusive WhatsApp community for NRIs only. The link is in the description below. Also, drop your questions in the comments. I would personally read them and respond to each one of them. Let me know what other US specific topics you would like me to cover in the future. Now, this is Alok helping you make smarter financial decisions. I'll see you in the next video. Thank you.